Welcome back, our viewers. Thank you so much for tuning in. Thank you for staying there. We love your feedback. Thank you for talking to us on our social media platforms. We are appreciating your feedback. Continue texting us through our number, which is 0710546454, and we really appreciate your feedback. Now, we are with an expert in studio. If you're just joining us, that is talking about the corporate tax in Kenya. And karibu sana, how can businesses optimize their tax planning strategies within the legal framework in Kenya?
Okay, yeah. Nice question. So when it comes to optimizing, first of all, is the many things that I've really talked about. So what I would add is about tax planning. Being able to plan, very important. Being able to handle timelines, like now we are in April. Yeah. So come May, then June 20th, everybody is lining up. So that is how you're bound to even make mistakes. So being able to understand timelines, tax planning, we always pay, corporation tax is paid in installment. I should have mentioned that. It's paid in installment. So if you made a profit last year, they deem that this year you're going to make your profit plus 10%. So you're supposed to, what you paid last year, you add 10%, then you divide it in 4 quarters. So yes, and then you pay. Then this month of April, by 30th, you're supposed to do balance of tax. So after you paid this 110%, now this year, before from January to April, you do your recalculations again and see if you made more profits, you're supposed to, that is the balance of tax, you're supposed to pay it by 30th April. And if you don't pay, there are penalties and interest. And if you've not paid installments for last year, there are still penalties and interest. So being able to handle all that is a very good tax planning. And I've always said that a company can push themselves to be tax compliant. So you can make suggestions, you can sit down as a directors in a company or management and say, how can we make our companies tax compliant? You do tax planning with the help of a tax advisor. It is very, very important. And with e-teams is pushing companies to be tax compliant. So most of our organization, according to how they stated, were 50% compliant. And with e-teams introduction, it was to push the compliance to about 90%. So you can push your business and see, what if we are 90% compliant? What taxes should we pay and how much should we pay? So you make your business be in that area. So tax planning is very, very important when it comes to optimizing corporation tax.
Thank you so much. And how are, for the international businesses operating in Kenya, what considerations should they keep in mind regarding taxes?
Okay. Tax? So for every organization that is doing investment in Kenya, first of all, by the time they come in Kenya, either as a branch, as a subsidiary, or as a company registered in Kenya, there's so many regulations that they are supposed to pay, and corporation tax, that is 7.5%. So there are so many, there's a lot of, by the time that company is coming to settle in Kenya, there's a lot of regulation they are supposed to follow through immigration, through, are they coming in as an investor, by the time they are given permits. So they just don't come and start operating business in Kenya. Yes, and that's how you find, sometimes you find investors saying, no, we've gone to another country, your country has so many rules, you know. So there are rules and regulations that they are supposed to follow. Then, because taxes are different in Kenya, how we charge is not Uganda, is per country. So them understanding the taxes in Kenya, getting a tax expert from Kenya is very important. Even also how people run business. How Kenyans run business is not different from how Uganda run business. If you're having a product and selling that product in Kenya and you're selling that product in Uganda, you cannot have this strategy in Kenya and implement it in Uganda. Totally different people, different environment. And that's how you find some company, multinational like Coca-Cola, even when they are producing their soda, you find that soda in Kenya tastes different from another country. So they are able to do different strategies for the same way when it comes to taxes, and them understanding how the taxes in Kenya operate. Yeah.
There's a question that I had. Where do we place EPZ?
So thank you for that question. So for EPZ, these are special zones to do business, and they have incentives for taxes. So if your business wants to, an EPZ is a zone that is created, and thank you so much for reminding me that is a zone that is created, that when your business is placed in that zone, there are tax incentives that you're supposed to have. So for corporation tax, you may find they are being charged 25%. Yes, there are others that can be exempted even from VAT totally. So if you're doing an export business in an EPZ, you find that even given a certificate of exemption, that even when you're buying, you don't buy with VAT. So there are some exemptions that you receive for you to be in that zone. And for you to be in that zone, there are also regulations. So you also don't wake up and say, now going forward, I will not be operating here or operating an EPZ. And because there are regulations also, and there are applications that you have to go through for your business to be accepted. And it's not just being accepted that you're in EPZ and you're operating outside. No, you have to be located inside. And then there are regulations for you to follow to be there. And then there are tax incentives. So you can weigh the options depending with the business that you do. Mostly it is very, for you to really be accepted, you're doing manufacturing, you're doing export. So there's a category that you can be in. Yeah.
All right. Can we elaborate on any specific industries or sectors that may have unique tax implications? In Kenya.
Okay. Yeah. So when it comes to corporation tax, the EPZ is one that when you're operating inside there, you have tax incentives than any other companies. There are others, depending on the nature of business that you're operating. You may find that the corporation taxes, there's no business that is exempted from corporate tax, for sure. None. Whether you're doing business income as a sole proprietor or your partnership, every business has to pay business taxes on their business income, taxes on their profits. Now the rates is when you're a limited company, there's yours. When you're partnership, when you're sole proprietor, that is a difference. Then we have something that we call turnover tax. Also, I should have mentioned that. Turnover tax. So, and it is a final tax. So if your business is doing 1 million, above 1 million, you can opt for turnover tax. And at the moment is 3% on your sales, gross sales that you're doing on a monthly basis. So when you opt for turnover tax, you don't do corporation tax. Right. Yes. And you file it on a monthly basis. So you pick all your sales. For instance, your sales in a month are 500,000. You do 3% of that money and you pay KRA. So at the end of the year, this turnover tax you've done is final tax. So when turnover tax was being introduced, was introduced to cover for small businesses, especially businesses that are below the threshold of VAT of 5 million. So right now when the KRA officers are moving around, for you to be really exempted from tax, I don't know you at what particular, because now as long as you have a business that is operating, either you're doing turnover tax or you're doing, and turnover tax, 1 million, the threshold is 1 million per year. So if I bring down 1 million per month, that's about almost 100,000 or less per month. So 100,000, if I break it down to per day, is somebody who is doing 5,000 in a day. Yes, sales. So who is that person? Is someone selling tea in a kibanda or mboga? Those people are people doing 5,000 sales in a day. At that particular point, they are supposed to be paying taxes. Yes, turnover tax. Yes. So now that is how we bring it down. Then another thing that I also should mention, because we have e-teams, and I've said e-teams is covering VAT, it's covering ourselves, but it's also coming to do corporation tax, because that is the same information they'll be using. And possibly the next one we're going to talk about e-teams, because it's a very hot area, and I really want people to understand. We're having farmers who are doing farming. And for instance, let me quote avocado. And we are having exporters. So for exporters, because they are corporate organization, they have to demonstrate their sales. They have to show their purchases, because it's a requirement now that even the purchases they are doing has to be e-teams compliant. These purchases they are doing are buying avocados from farmers. So when the farmers take avocado to this company, they are saying, we cannot buy because you don't have e-teams invoice. And right now we are having e-teams Lite that you can generate on your phone. So this farmer goes ahead and generates an e-teams invoice on their phone because they want to sell to this company. But now they have given information to KRA. What happens? So they don't file on a monthly basis, but KRA has data that they have been selling avocado a full year. So these are people who have never even done any return all their life. But now there is an information that they have given KRA. So they can no longer sit down and say, I'll not declare business income, or I will file an return. Now information already is registered there. So that is a caution to farmers and to everybody who is doing e-teams. If you have to sell, and even this organization, because of the requirement of the purchases, for instance, an organization like for us, on a weekly basis, we spend 15 to 20,000 on lunch for staff. This is amounts that you are buying vegetables. We are buying supermarket items. When you are buying that vegetable from that vendor, that is a purchase to us. So we are telling this vendor, give us an e-teams invoice so that we can pay you. These are mama mbogas in the market. So they are doing it on their phone, but it has an implication in the future. They have to declare that business income. Yes. Yeah.
Awesome. Amazing. Yeah. You mentioned about the turnover tax.
Yeah.
And when you're paying, I don't know if I got you right.
Yeah.
That when you're paying the turnover tax, you're exempted from the
corporation tax. Yes.
Are you also exempted from other taxes when you're paying the turnover tax?
Okay.
Yeah.
So mostly when you're doing turnover tax, you also don't do VAT, because it's counting on your sales on a monthly basis. And mostly when you opt for turnover tax, you're below that threshold of 5 million. So mostly it's a final tax. It will cover all your taxes. Yes.
Right.
Yes.
Amazing. We are moving on well. Now, kindly, how does compliance with corporate tax regulations contribute to the overall economic development of Kenya?
So Kenya is driven on taxes. And these taxes are the taxes that pay doctors, they pay teachers. I say doctors and I remember they are on strike. It is what is running the economy. We run it on taxes. And another thing is that taxes are not collected a full year. You know, sometimes we think that they collect a full year, then they say, now this is the 3 trillion you've been looking for. No, money are spent on a monthly basis. So money is limited, money is spent. So their budgets it's concurrently with their money collected, their money being used. So that when we hear there is a deficit in collection, and yet there's expenditure on the other side. Now the government has to see where to get money for this deficit. So it's something that is happening. So corporation tax is very important. Is what is driving the economy. Is what is doing the payment, is running is doing the economic activities within within Kenya. And also, of course, the other taxes, all taxes brought together. That is what is running the economy and running the government every day. Yes. Besides now loaning, other loans and so many other things. Yes. But tax is the core. Yeah.
Wow. And when you mentioned that there are other taxes, could you kindly briefly tell us the other taxes that businesses have?
Okay. So I mentioned turnover tax, which is a final tax. And I said it's 3% of your gross sales. Yes. So we also have VAT. So VAT is a threshold of 5 million. So someone who is doing 5 million and it is vatable. So VAT has 16% exempted and zero rated. So vatable goods, possibly like the one I've said in hardware. So there's a schedule that you can use. For exempted, I will use an example of animal feeds. The animal feeds are exempted. So for zero rated, I will talk about something like export, when you're in the export business. And some people ask me, what business can I do that doesn't have so many issues? If you can do export business, there are no so many tax issues on it. So we've talked about VAT, and it is supposed to be done on a monthly basis, and we have ITIMs. ITIM regulations has to be there. Of course, right now we have ITIMs on non-VAT businesses. If you're doing even below the threshold, you're supposed to also to be ITIMs compliant. So we have also employee taxes, that is pay as you earn, the one that we deduct when you're paid a salary, the employer deducts and pays on your behalf. And employees have so many others. NITA, 50 shillings per month. And that 50 shillings, some others, you just give it out and you don't know for what reason, is for training. So it is enhancing training of your staff. So you give NITA, then you can call a NITA certified trainer to train your staff for free, and they are paid by NITA. Or you can even take your staff to NITA. They have short courses and they can do because of that contribution that you've done. So we have NSSF. We have NHIF for the hospital. And at the moment we have SHIF that is replacing NHIF. We have housing levy that is supposed to give us houses. So also it had a lot of issues. Then we stopped. Now it is the legal framework that was mentioned has been followed. Of course, there are exemptions that they are supposed to be there, but they have not been gazetted. So there's also that. We also talk about rental. When we have rental buildings, there's rental taxes, monthly taxes that are this year at 7.5%. So if you have residential property, all of these properties that you can see, gross rent. So if your house you're collecting 200,000, 300,000, gross is 200 multiplied by 7.5. You pay KRA on a monthly basis. And there is a lot of surveillance, especially on rentals, that is happening. So their KRA officers come into your rentals, posting as the tenants, and they collect information. Yes.
Awesome. Amazing. And the question of persons with disability. Now, when it comes to corporate tax, and this maybe, how does it go? Let me just explain how does it go if this is a person with disability, and mainly putting in mind that they are exempted from tax.
All right. Yeah. Thank you so much. So is this person with a disability employed? If they are employed, their pay is exempted from pay as you earn until 150,000 per month. So there is a there's a cut. So if they are getting paid 150, below 150,000, they are totally exempted from pay as you earn. And they have to have certifications, exemptions. You cannot say you're disabled because we can see physically. No, there's exemptions you're supposed to get from the Disability Council, and then you take to KRA. They even do an interview. Yes, they conduct an interview to just check, and then you're given that exemption. And the exemption certificate is renewable. So you cannot be given an exemption certificate for life. So if they are owning a business, they are owning a business, and they are sole proprietor. They do business income, and then for corporation tax, it is graduated. The same way, if they make profits above 150,000, they are not charged the corporation tax. But anything beyond that, it is graduated. If they are doing corporation tax, they are in a limited business, that one they are supposed to do the 30%. So the exemption is on when they are employed, when they are doing sole proprietor, and they have to get the exemption certificate. Yes.
So when they have a company, they have to pay.
They have to do corporation tax. But you see, even if they have a company, they are directors.
Yeah.
They are paying pay as you earn, so they are exempted on that salary.
Right.
Yes.
Right. Amazing. And now, as we come to a conclusion, I just want you to give advice to for business owners who are seeking to navigate through the corporate tax landscape in Kenya. What would you tell them?
Okay.
Yeah.
So what I would mention right now is that we are operating business at a different level.
Yeah.
The way we used to open a business, you don't care, nobody comes, you operating your business, those times are over. Yeah. Visibility is on data. There's a lot of data intelligence to even know your location. Right now, for me to come here, I use Google Maps. Yeah. So even we have websites. Website is now key for every business. Social media activities for you to sell online is key for you now to make business. So there's a lot of enhancement that you cannot be operating somewhere in the midst of nowhere and nobody knows your business. So because of that, you have to put structures in your business. Yeah. Do your books very well. Have an accounting software done very well. Have professionals, accountants, even accountants that you're hiring in your organization has to be understand how the business is running. Incorporate internal controls. I have seen so many people there are so many businesses that are collapsing because of the economic activity, what is happening. So internal controls, having management report on a monthly basis. Are we making profits? What are the issues? Feedback, are we selling? Having that conversation. The managerial process is how we are running our business. You have to have them correct. And understanding taxes, having the correct tax advisor. Also for corporation tax, there's a lot of KRA audits that are happening than any other time. So having the correct tax person to help you through a tax process is also very, very important. So even you as a business owner, understanding the business, understanding all these things, going back to school, by the way, to do a short course. So sometimes, long time ago, the elderly business people that I meet, they always give me a very nice story. Oh, I used to buy this here and then I sell here. As in simple activities. But now for a business owner to scale their business, they need a lot of learning. So even getting a short course that you can do for bookkeeping, for management, for human resource. By the way, let me tell you right now, the people you are employing is not the people who have been employed 10 years ago. There are people who look at you and they're like, the Gen Zs that you need to have a different understanding, because those are the people that are coming in the market, coming to your organization. So you have to even learn people management skills. So, and if you don't incorporate them and you say, no, for us, we'll be hiring 30 and above. that business will not innovate.
Yeah.
So there is also an advantage of having that team within the organization.
Yeah.
So understanding how to operate with them and bringing them on board. So right now you cannot operate a business like, no, there's something you have to.
Yeah.
Otherwise, not just for taxes, even for survival and scaling. Because at the end of the day, you want to scale that business to the next level. There's a lot of understanding that has to happen.
Yeah. Amazing. Time is not on our side, viewers. We would have loved to hear more from Dr. Regina. You hear she is an expert in this field of taxes. And I think we'll just call her back for more of business taxes. We need to understand more. There are taxes that we did delve in deeper, like the turnover tax, VAT. We need to know much more about them. And thank you so much, Dr. Regina, for coming. Thank you for gracing us with your presence. We really appreciate. Thank you so much, our viewers. We'll stop at that today. Thank you so much for tuning in to PrayerCaveTV, my source business show. It has been a pleasure having you. Thank you so much for your time. We are so grateful that you could find time to just tune in. And I just want to appreciate people who are texting in, sending your questions, send in things, what topics you would want us to tackle here. If it's about taxes, send in those questions and we'll be looking at them in future episodes. Until next time, that has been my Source Business Show, and I've been your host, Doreen Kimondo. See you next time.